Good morning, everybody. It's Monday, June 21st. I'm just going to quickly run through these charts. This is the Kitco overlay chart. Pretty much on Friday we saw a breakout above the 1245 and we saw a strong rally up, making a new 2010 high. Pretty much gold bounced off the 1255 area and found support. We're finding it's reaching new highs and then selling off each time. We're starting to get some choppy action pre-market today, which means we could start to see a top. We'll have to play that by ear, but I think gold is getting a little exhausted here. If I pull up the daily chart, I'll just show you quickly what I'm seeing here. Pretty much when you get a chart pattern that is really clear, a lot of times if everybody can see it, you've got to be very cautious trading it, which is why I don't want to just chase anything and jump in. Pretty much we broke the high here, traded above it for a couple days. This is the daily chart, and then it sold off really sharply, shaking a lot of investors out. And then what happened is we broke that high again, making a new high, and then we saw another pullback. And we saw on Friday we broke that high again, and right now we're just trading above there. But here's the difference. On this big rally up, we saw volume increase as people were buying in. Right now we're seeing gold volume decrease as the price drifts up, and this pattern is very clear for people to see, and it's got to be suspect. If everybody can see it and everybody's playing it, every time it breaks a new high it ends up selling down, and it's on lower volume, the move could be very tired. And this is kind of what I was talking about before. It'd be nice to see this short steep trend line broken, trigger some stops, break this low over here, which will trigger quite a few more stops, and then it'll provide a nice low risk entry point, and then we could see gold rally from there. So I think a lot of people are just buying these breakouts. Some of them are getting shaken out on these small pullbacks, but there's a majority of people still holding on tight. So I think we need some severe action to shake people out before gold really makes the move. So that's what I'm seeing here is divergence. We're getting a drift higher on a tight trend line. Volume is drying up. People don't want to buy at these premiums anymore. They're starting to worry about gold. So that's what I see there. As for the SP 500, pretty much if we look back at the February, this is where we had a market bottom in February this year. Pretty much at the same level we had this cluster, and we had this cluster last week. Unfortunately we didn't get much of a pullback. I wanted to see a pullback similar to the February's over here. It actually put the market into a pretty good oversold condition, and it was a perfect opportunity, which we went long. And right now this morning we're seeing the S&P, it's actually moving up pre-market. We haven't got that pullback, so it's going to be tough. I don't like to chase. The market right now is actually, it's gone fairly steep up. It's going to be really overbought with today's pop, and I don't really want to chase it. Problem is we could get this slow grind which just keeps going up, but there are going to be some pullbacks that are going to provide some opportunities to get in depending on the charts here, but we really have to play it by ear. I don't want to jump in after a big rally and then a pop. It's not how I trade. So that's what I'm seeing there. If we quickly look at the intraday chart, this every candle here is 4 hours, so we can see back. This is the April high. Pretty much we had the breakout. Instead of a pullback down into this kind of key support level, which is where there's going to be a lot of noise, I was hoping we were going to get a pullback and then rally. Instead we're just seeing this kind of drift up like that, which isn't my favorite price action. It's actually kind of bearish, believe it or not. Market is overbought. It keeps grinding higher like that. It's usually it leads to a fairly sharp sell-off and triggers a lot of stops. So anyways, next resistance level will be 1150. Pretty much it's going to go up in 25-cent increments, which is how these waves have gone. And then there'll be a 1200 or 12 or 1190 area will be pretty key resistance level if we get up to there. If we look at the market internals, the advanced decline line, the market hasn't opened yet, so it's going to probably be overbought once it opens, because the market's going to gap up about 1% today as so far. Anyway, so we're going to end up seeing the market on the NYSE overbought. A lot of stocks will be moving up. The put call rate, the NYSE trend, which measures buying and selling volume. We've had 3 days of somewhat a little bit of profit taking, which is the sideways choppy action we saw Wednesday, Thursday, Friday, and we could come for one of these little island days, which one of these little days with the candles down here, which means there's going to be a surge up, which is what we're seeing pre-market already. So that's kind of pointing to higher prices. But after today, if all that comes in line, then we could actually get that pullback we're looking for. So even though the prices could really push up today, I think it's going to be the tipping point for a correction. So maybe in a day or two we'll have a low risk entry point. Anyways, the VIX, it usually forms these double tops and then just grinds lower as the market rallies. You can see it's had a double top here. Recently it's had a double top and now it's grinding. It is trading right at a pretty good support level, so we could see a small bounce, which I've mentioned several times. And if we get that little bounce, it'll just be hopefully a small correction in the SP, and we'll end up going long, and this will just continue its grind lower just like it did over here, which as this grinds lower, the S&P is rallying, same as what happened over here. So that's what I'm looking for there. Anyways, I'll talk to you guys in a little bit.